Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, it continues to deteriorate under the hood. What are we talking about? We're going to show you a couple of charts that you are definitely not going to want to miss. Let's dive in.
Trade Genius.
So Bob, I think by and large, what we've been seeing is just that entire, foray of printing from the Fed and, here's all these PPP loans and, oh, by the way, you don't have to pay us back. Now they're finding out a lot of people, turn around and, bought property with the money, not using it responsibly. Obviously, that's what happens when you give people money and they don't have to pay it back. We've gotten inflation for it. We've gotten just elevated asset prices and everything, younger generations looking at everything going like we're screwed, but it's not something that I think we're stuck with forever. And I think these two charts is telling us that we may be looking at a big reset.
Yeah, it's funny you said that. I've had two conversations today. One from my daughter, who exactly said the same thing. She's like, it's unfair that I'm 23 years old. I'll never be able to buy a house. Nobody has any money, blah, 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 blah. She was really annoyed because she has a good job and she's trying to save and she sees no hope. And she saw the debate last week. And she just said no good choices. She was just like, I was talking her down from the ledge. She never called me Monday morning at 8:30 or day off. So she was agitated. And then today also, I'm working on some of my business taxes, talking to my CPA, and basically, he was saying the same thing. He goes, yeah, we're seeing things, it's just deterioration here across the board. And here, this is the chart, okay, that just shows it all. We're done. All that money they gave us. And one good thing is my daughter saved every penny of it, okay? I'm managing it for her. She has a nest egg up there. She's living her hand to mouth as a young kid on her own, but she has backup because she didn't spend a penny if I wouldn't let her. And even though she was over 18, she listened to her dad. So she has her nest egg. Everybody else spend it. I remember, Phil, I was going on vacation and I'm like, why is the airport so packed? Everybody was taking their COVID money and they're heading, 25, 26-year-old kid. Did you go on vacation when you were that age? Absolutely. I did not.
No.
They're flying to Hawaii. They're staying at the Hilton, they're staying at the Four Seasons. And I'm like, I've never stayed at those places, and they just blew it. It was like, live for today, for tomorrow, we shall die.
Yeah.
And now death has arrived. Look at this, guys. Negative balance. And people are going into a recession here. We have a chart we're going to show you tomorrow about jobs. It'll just freak you out. But nobody's going to have any backup plan. That's what I feel most bad about is that. And we're going into a political environment where these guys are going to be pointing rifles at each other. And they're not going to be throwing money at people this time. It's going to be a fight. It's going to be brutal. And the Supreme Court ruling on the Chevron, so the administrative state can't just conjure up stuff now either. All this stuff has to go through Congress, and Congress is toxic right now. So don't expect easy money like in the past. This other chart here, the missing payments, Phil, I'll let you dive in on this chart.
Right. So, if your pandemic windfalls are gone, then what happens? Well, then you're going to start missing payments and other things. So here we have credit cards in blue and auto loans in black. Both of them are going up. Credit cards especially, because I think most of the younger crowd says, hey, we're going to continue to live our lifestyle, and they're going to run up cards. I've heard, you have those call-in talk shows to the financial guys that say, and that people spew out their situation. And it boggles my mind that the younger generation is just like, yeah, we're just running up our cards. There's like no plan. It's just perpetuate the lifestyle, which it's just odd to me because when I was growing up, the first thing was get a house, right? So I hustled to get a house, but like you said, vacations and staying at the Hilton or whatever, it was just not on the radar. There was like core things needed to get done first. And it just seems like we're now in this hyper consumer economy that, it's not only eating out, it's getting your food delivered. You got all these monthly expenses that we just didn't experience at that age, 2 decades ago or whatever. So I think a lot of the earnings and earnings expectations have been built up on this excess, right? And earnings expectations drive stocks at the end of the day. And then you layer in derivatives on top of that to throw in some leverage and get things extra perky like we're seeing and we're probably going to see a culmination of. But once look guys, Q2 is done. We're going into Q3. Q3, when they give us our earnings outlook for the Q3 earnings, I think that is where we're going to start seeing a negative reactions to the market. And we're going to go into that bad news is bad news phase. Because remember, the smart money loves to drive prices up into what they anticipate is the first rate cut. So every time we're seeing situation where the Fed can be dovish because the data is weakening on the economic front, right? That's why bad news is good news right now, because they're driving up to that trade, and then the trade's going to turn into bad news is bad news. So that's basically what we're waiting for. The yield curve is starting to perk back up. I think if it continues this push here, we're going to be over that zero line on the yield curve, back to steepening. Could be as early as next month. We'll have to keep an eye on that as the weeks progress here. But, we're starting to get into that final phase now, Bob, that we've been talking about, where we're pushing up into the election. This is a very bullish time of the year. So all of this stuff matters, right? All of this missing payments, all of this savings are wiped out. All of it matters, but the market isn't the economy. It's not going to trade exactly like the economy. So you just have to know these are leading indicators, guys, and the market will catch down to this, but I don't think you're going to see it until they get everybody roped in, and then you need a trigger, and the trigger is going to be earnings guidance, and the earnings guidance I think is going to be atrocious when we get our next round of earning calls for we're going to be having Q2 earning calls that'll be coming in over the next couple of months, and so that's where I'm going to be looking at very carefully how this market is reacting and what the guidance is. If we can get another round, then potentially we can get a pass maybe into and through the election, but I do not see how Q3 earnings calls are going to be looking good in terms of forward guidance and earnings expectations, Bob.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. Yeah, totally agree. And that's why, August 20th is kind of my pin date, because that's the halfway point between the consensus for the fourth quarter. And you're starting to see maybe some of the push here now. Tesla's kind of one of my bell cows. And we told people when Tesla was at 180 that this thing's going to go to 228, hit 213 today. It's probably going to push up into earnings. And that's going to be our first test. The consumer stocks, obliterated. Nike, obliterated. Walgreens, obliterated. And it's not because their businesses are bad. It's just that their businesses cannot support the stock price. And then companies do stupid things to protect the stock price instead of doing smart things to protect the business, because these CEOs and these boards, they know they're transitional. They know it's not a job for life. They got to manage just like they do in Japan. And you compound, over exuberance with stupid reaction, and then you end up with longer term recessions, like blowing out all your employees and stuff like that. So I think it's going to be wild. You could be right. They can milk it to the election, but I think also too, I think people are going to front run this thing now as well. So you may be right. If they think the next president is going to be business friendly, they may milk it into October. Or if they get nervous, and they think something bad's going to happen, I think August. So we have our pin date. But in the meantime, I think we're going to be flipping back and forth. We're going to have a high in July and a sell-off. We're going to have a high in August and a sell-off. September and October are usually pretty wonky anyway, so you don't want to be really heavily exposed. And then the election, it's dealer's choice of how that's going to be. But going into 2025, I think you and I have no argument with each other that I don't see how the market survives 2025.
No, I don't see that either. And, back to the Fed and Yellen, I was looking at, the Fed balance sheet continues to roll off, right? And they haven't been accommodating, when you say printer go burr, it's because the Fed is expanding their balance sheet, and they haven't been. But, Yellen is part of the Fed cog, right? She used to be the chair. She's now inside government in the most powerful position as the head of the Treasury. So as Treasury Secretary, she's been pulling out the printer card herself, right? Because that's all the Fed knows how to do is print and mismanage and be late to the party in terms of fiscal policy. But she's been printing, right, with the T-bill trick, which I don't think we've seen quite the same thing done in previous administrations or previous Treasury secretaries, where they floor so much short-term T-bills. So they've been getting a pass in terms of their balance sheet roll-off, because if a recession's coming, and let's just say that they've made the decision that they decide, that we need to have a recession to reset inflation to a degree. You're going to want to continue to roll off your balance sheet as long as humanly possible before your first rate cut. Because once you start cutting rates, the eventuality is that you're going to start expanding your balance sheet again, right? So I think they're working in concert, although it may not appear that way. But I think Yellen's form of printing is giving them a huge pass to continue to roll off the balance sheet, because that printing of the short-term treasuries expands GDP. It helps absorb the balance sheet roll off for a time and props the market up, which is what you typically see into the election. So I think there's a bit of tag teaming going on. But make no mistake, once that's done, we're going to have to go back to a lot more long-term debt issuance once this election's over, because they can't afford to keep doing T-bills. They're just not going to afford the interest payments. That's just fact. And then the Fed's going to take the baton, and then they're going to go into balance sheet expansion once all of the rate cuts are done, because that's not going to work. Market's going to be in the toilet, and then they're going to finally go back to, and they'll have some cover for that because inflation rate will be down. But when inflation rate ticks back up, because it will, because we're out of room on that now, on the next round of easing from the Fed, then what we're going to see is the narrative is going to change from 2% inflation is going to change to 3 to 4% inflation as your new normal. Okay, now this is why between now and then you have to be into hard assets. I like Bitcoin myself, but gold's going to, metal's going to do well, commodities are going to do well in that environment. Why? Because they are going to be resilient against inflation, and if you're hedging your bets on those assets while they're down, because they will take a hit between now and then, this is after this initial push up that we're expecting, of course, then you're gonna be well hedged against that playbook, because it's coming. Don't make no mistake. We're gonna have inflation again. It's gonna come roaring back, and they're gonna tell you that it's the new normal. So if you bought the dip on commodities, on hard assets, real estate, Bitcoin, gold, oil, you're gonna do fine going into the rest of the decade, in my opinion. But don't trip up this trade that's gonna manifest, and that's gonna happen over the next 18 to 24 months, in my opinion.
Yep, the big rotation. I totally agree with you, Phil.
All right, guys. Well, that's gonna do it for this episode. Let us know your thoughts below in the comments. As always, smash that like button and subscribe if you haven't. That really helps out our channel. Also, if you want help navigating these markets, it's going to be very, very tricky, but we've got some great things planned on how you can milk money out of this market, even if it rolls over. Head over to tradegenius.co, check out our specials over there, and we'll love to see you guys in the room. We'll see you on the next episode. Take care.
Trade Genius.